6 straight days of significant declines. The Sensex has shed over 1,800 points this week, with the Nifty dipping below 24,650. This market correction has erased substantial investor wealth as pharma stocks collapsed, IT cracked, and FIIs turned net sellers. But what truly underpins this volatility, and what does it mean for your portfolio? Stay with us as we meticulously analyze the forces at play. Before we dive deeper, these insights require careful research. So hit that like button, subscribe to the channel, and let's decode this market mayhem together with a prudent perspective. The biggest shock came from proposed 100% tariffs on branded and patented pharma imports by the US, effective October 1st. This policy shift introduces significant uncertainty for a key export sector. Indian pharma giants like Sun Pharma, Dr. Reddy's, Biocon, and Zydus tanked 4 to 6% in a single week. This immediate reaction highlights the market's sensitivity to geopolitical trade policies. Pharma constitutes nearly 20% of India's export basket, making this tariff threat a critical concern for overall economic stability. Foreign institutional investors, FIIs, dumped Indian stocks worth over 12,000 crore rupees this week. This consistent outflow signals a cautious stance from major global players. Every day of selling added pressure, particularly on large cap and high beta sectors. Their withdrawal often reflects a reassessment of risk-reward dynamics in emerging markets. The rupee touched record lows, nearing 85.5 rupees per dollar. A weakening currency makes imports more expensive and can deter foreign investment. Rising oil prices and a stronger dollar globally exacerbated these domestic pressures. Global markets also remained volatile, with Asian and US equities slipping, triggering a broad risk-off sentiment. IT stocks like Infosys, TCS, Coforge, and Persistent saw heavy selling. This was driven by tariff concerns and fears of a global economic slowdown impacting outsourcing demand. Pharma and IT together account for nearly 30% of Nifty weightage, magnifying the overall market fall. Even broader indices saw red, with small caps tumbling over 3% this week, indicating widespread caution. So what's next for retail investors? With FIIs exiting, the rupee weakening, and tariff tensions rising, the Nifty could test 24,200, 24,300 if selling persists. However, domestic inflows from mutual funds remain robust, and India's macro fundamentals are still largely intact. Prudent investors should consider hedging positions, staying defensive in sectors like FMCG and banking, and avoiding chasing high beta counters until stability returns under the guidance of advisor. This period demands careful analysis and a disciplined approach. If you've ever felt markets were unfair, hit that like button. Subscribe for real, data-backed analysis. No noise, no hype, just facts. Share your thoughts in the comments below, and let us know how you're navigating these turbulent times.